Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday video is for Tuesday, April 6th, 2010. Well folks, we have another flattish to slightly higher day on Wall Street. Really just over the last 20 minutes, we've seen a little bit of a surge in the markets here on the back of the FOMC minutes released at 2 p.m. Eastern Time. Now, what was so key about these minutes? Because until now, the markets had basically been lower to medium, right around the flat line, and then we did get a little bit of a tick up here to take the markets over to the positive side. Now, what was the catalyst here? Well, first of all, you have to look at what the Fed said in their statement. Their minutes basically showed that they were willing to do whatever it takes, and what they said essentially was that if the market needs them to raise interest rates because it gets too hot, they will, but overall, they're willing to leave interest rates extremely low for a long amount of time if it should call for that. So it's really telling them, or telling the markets, that they're willing to keep these interest rates low, 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 extremely low, and that is overall bad for the dollar. We all know how the dollar reacts, and sure enough, the dollar started to tick down after that statement, and you got a little bit of a move up here. Now, by no means is it a giant move in this market, guys. I mean, the market by no means is ripping higher, but you are seeing a gentle move up. Volume today, again, folks, is insanely light. I mean, to the point where we're looking to rival yesterday's lightest trading day in essentially a couple years, aside from the period between Christmas and New Year's, if you take a look at that volume. And for April volume, this is a very, very unusual, showing us that, again, institutions continue to just sit on the sideline. Institutions aren't selling, but they're sure as hell not buying either. All right, so again, folks, nice little pop-up. Again, you can see how we gapped lower today. We gapped lower on the back of a stronger dollar initially this morning. Initially, what we saw was overnight Greece came out and said, again, there's some problems. This is not looking good. That's not looking good. That created a drop in the euro, which in turn rallies the dollar. The dollar moved up. The markets gapped lower. Initially, off that gap, you can see you can never break that 50 moving average. This is the 50 moving average right here. You could pierce it 1, 2, 3, 4 straight candles, even 5, ultimately creating what we call in the money stocks tail syndrome, or in the money stocks tail signal. That generally tells you you're going to go higher with a high probability, because you have so many tails to the downside, it goes the opposite way. Markets again start to uptick, sideways, little boost off this necktie-ish area of the 20 and the 50. Right up we go, right to yesterday's highs, at which point we trade back off of it, back to those highs, back off of it, and then again popping here on the FOMC minutes. Now again, what to look for this afternoon? Well, first of all, we have to be talking a little bit about how key this market is right now. You're not seeing a lot of follow through, not a lot of major moves. What's keeping this market up today? Today would have to be financials. Financials are really the leaders today, folks, that I'm seeing in this market. JP Morgan is up about 50 cents on the day. Goldman Sachs only up 30, but if you take a look at Wells Fargo's up about 60 cents as well. That's a strong move on Wells Fargo today. All right, going back to the SPY, you can see we had a nice move up here. Interestingly enough, I gave my premium members of the Research Center and Intraday Stock Chat a key level to watch. That level has now been touched today, and that again seems to be where we're stalling out in this market. And again, we'll see again if we can inch a little bit above that range, but this is the range. Anywhere between 119.10 and 119.20 is the range that I've been looking for over the last few days for this market to tag. If it gets through that, well, then we're talking about another possibility of a little bit higher move in this market towards the end of this week, which could take us to another level, which will be discussed in tonight's nightly video to the Research Center subscribers. But in any case, take a look at the dollar. I mean, simply put, guys, this is just a dollar in reverse move. Look at the UUP intraday. Here's the FOMC minutes. You can see they come out right here at 2 o'clock. The dollar ticks down. These are 10-minute candles on the UUP chart, which is the dollar index. And down we go, 1, 2, 3. And what do we know about the markets, guys? SPY, take a look. 1, 2, and then pause candle starting to inch up a little bit as well, right in this range. So you can see the reverse move again. It continues to hold true as we've seen that. Now, a couple good small caps today, folks, that we caught in the intraday stock chat. SHIP, SERV, FONR. I mean, there's just been a ton of small caps to play today, which have been beautiful money makers in the intraday stock chat. We'll continue to watch those, as well as CNLG for Research Center, guys. We know that that popped pretty nicely intraday, and for those in the Research Center, you know that that is currently something that we've been watching quite closely as well, possibly even more. All right, so again, keep an eye on this market overall, folks. You are coming into a little bit of resistance here, no doubt about it. The FOMC minutes, again, have been released at this point about 20 minutes ago, 22 minutes ago at this point as we approach the 2:30 time frame. Let's quickly take a look at the oil chart, USO, and USO should be getting a little bit of a boost off the drop in the dollar, and you can see it is. And again, the nice little bit of a flattish day on oil, although it was down before, but now it's back to the flat line on the weakness in the dollar. A couple other charts, guys. GLD up about 50 cents on the day, went to 111. 11.50. Again, you can see that we're almost back to a double top here, but not quite there as of yet. You can see almost got there on that chart. A couple other charts to look at. ExxonMobil is slightly weaker on the day, but very, very minor weakness here. Overall, you can see the big comeback. As soon as the dollar starts to tank, you will see Exxon get a bid, as well as Chevron. Chevron as well, CVX. Take a look at this. All right, pop up this Chevron. Look at that pop over the last couple candles right over here on the weakness in the dollar. And again, remember, the dollar really dictates a lot of things here, because whenever the dollar weakens, commodities will get a boost. When commodities get a boost, commodity stocks get a boost, like Exxon and Chevron. Now, Chevron and Exxon are both key components of the Dow. Therefore, the Dow gets a boost. So it's really a kind of a chain reaction type event on many of these plays here to really understand how the markets get a bid on a weaker, why the weak dollar is actually such a good thing for the markets. And that's just a good example right there of what I just explained. Now, going back to the SPY, folks, again, spiders are trying to inch higher here just a little bit. Very, very light volume. We've done 75 million, and believe it or not, the last three candles really had the biggest volume of the day in them. Quite a substantial move. Unbelievable how light this volume has been. I touched on that at the beginning of the video. I continue to really be absolutely surprised at how light it's been because of what's going on. You know, I mean, you anticipate us having more volatility at this point of the year. I mean, really February, even January, February, March, April, and May should be the most volatile times in the markets, and we've really seen the least volatility in about 2 years at this point in the market. So you have to wonder, as we inch into the early summer months of June and July and then August, how is this market going to react? Are we going to get even more sleepy? Are we going to go sideways even more? And these are just things we have to keep in the back of our mind. And again, in the Research Center, we'll guide you through. Now, again, reminder, folks, in the Research Center, we are going to be starting those live broadcasts in a couple of weeks, most likely, so you want to be ready for those. Those are live broadcasts of news events at any time of the day, 24 hours a day, basically. Should anything big happen, we will be on the mic to broadcast after sending out a text message alert. Text message alerts should be debuting within a week or so as well. For any new updates in the Research Center that come out, we will be sending out a text message or email alert should you decide to subscribe yourself into those. For those of us that are members, obviously you have to be a member to get those text message alerts, but it really is a key thing for speed. Speed is so key in this market. You got to be on the cutting edge of everything on any move in this market, and that's what we want to be here at InTheMoneyStocks.com. So we'll see you all in the Research Center tonight. I will give you guys a good 40 to 45-minute video tonight on hardcore analysis. We'll cover all the key moves, all the key stocks that we're in or that we're currently looking at, and we'll see you there tonight, folks. Talk to you later.